Hey everyone. Today we're going to break down the American market, take a look at a few instruments, and highlight the key points that I hope will help you make well-informed trading decisions. Let's get started. And today we'll start with the S&P 500. On the monthly chart, everything is still going according to the plan we said earlier. The levels and trends remain relevant. The price continues to trade around the round level of $7,500, and lately, selling volumes have been increasing, which could indicate the start of a correction. Now let me explain what I expect from the upcoming movement. Earlier, I highlighted the previous effort level in the range around $7,000. This range is key for determining future targets. If the level holds, then I will expect growth to resume up to the $8,500 level. That was the first possible scenario. The second scenario is if the level doesn't hold, then I will expect a deeper correction, which should reach approximately the $6,250 level. After that, I will also expect the asset's price to resume its growth, this time targeting over $9,000 per share. Next, let's move on to the daily chart. If we look at the movement in more detail, I can say that buying volumes are running out, and the likelihood of the upward trend continuing with the current data is very low. Yes, the price might be pushed slightly above the nearest high one more time, but only as a manipulation and to collect liquidity, after which the price will be pushed down again to the $7,000 level to test the previous effort. It is precisely at this level that we will assess the player's efforts and set the next targets for the asset. Therefore, for those who hold shares in their portfolio, there's still nothing positive to expect in the near future. In my opinion, the position on this asset will remain at a loss for some time. Well, on the bright side, this will only be a correction of the previous growth. There are no signs of a global reversal. I believe it only makes sense to buy or add shares after the correction's over. Next up are Google shares. On the monthly chart, the trends and levels remain relevant. After reaching the target of $350, there was a reaction from buyers. But as I mentioned in the previous review, it doesn't look at all like an effort to continue the upward movement. It looks more like a reaction from retail traders who are expecting a strong rebound from the level that tested the previous effort. In my opinion, the most that could happen is the price reaching the previous high. But even that possibility I consider minimal. A more likely scenario, in my view, is a continued decline in price from current levels down to $275 per share. The previously noted chart expectations remain in effect. Now let's move on to the daily chart. Here, the situation so far confirms my suspicions about a continued decline. The price has shown growth once again, but the volumes in this movement are very small, which indicates that there is no interested party in this move. So the daily chart also confirms my suspicions about a further decline. Therefore, for those who hold shares in their portfolio, I consider the most likely scenario to be a continued decline of the asset to the price range of $260 to $275 per share. After that, I will expect growth to resume. At the moment, I still consider it risky to buy or add more shares. It would be more logical to wait for the correction to end at the level indicated below. Next up are Apple shares and their monthly chart. The trends and levels remain relevant. The price is squeezed between levels and is roughly mirroring the movements of Google shares. Although the price movement confirmed my assumptions about a renewed growth after testing the previous effort, the continuation of this growth and a breakout to new highs is still very much in question, since I have yet to see the necessary trading volumes for that to happen. I think this level will be key for further expectations. If it holds, I will expect the price to continue declining as part of a global correction toward the $245 to $250 per share range. But if the price breaks through and consolidates above it, then the target for this growth will be the previously mentioned level in the $375 range. I'll keep my chart-based expectations unchanged. Now let's switch to the daily chart. After the manipulation, the price continued its upward movement to the indicated level. This is not at all how I imagined it would go. But it's important to note that buying volumes are increasing, and it's quite possible that the high the price has reached could be broken. But as I said earlier, it's best not to jump to conclusions. It's the movement at this level that will determine the asset's next targets. I'll make a slight adjustment to my chart-based expectations. I'll remove the previous arrow so it doesn't get in the way and add a new one. I'll keep the downside scenario as a possibility, but only if the current level holds the price. So for those holding shares in their portfolio, pay close attention to how the price behaves at this level. If the price breaks through and holds above this level, we can expect it to rise to $375. But if the price gets stuck here and is pushed down, the target for that downward move will be the $240 to $250 per share range. I don't think it makes sense to buy more shares at these highs. That's roughly how I see things playing out. But if you think differently, let me know in the comments. And don't forget to like and subscribe to the channel so you don't miss future reviews. I hope this was really helpful. And don't forget, we can make predictions, but the market has the final say.